Hi, I'm Andy and I'm the founder of the Angel Investing School. Over the last 6 years, I've invested in about 17 startups, so I know one or two things about angel investing. In this video, I want to briefly walk through what the angel investing process is, step by step, and then touch on some of the risk and rewards of angel investing so you have a really good idea as to whether it's for you or not. So typically, with the angel investing process, it starts with you actually finding great entrepreneurs to invest in, right? You've decided on why you're doing this. You've watched our other video to understand what your motivation is for getting started. You might even have your investment thesis, which we covered in another video, around what type of startups you invest in and why. So now you need to go and find them. And one of the hardest things in angel investing is accessing great deals. So it might be through an accelerator program and visiting a demo day. It might be introductions through other investors who are in your network. You might be part of a group of other investors, like an angel syndicate group. There are varied ways to go and find great deals. So once you find a startup that you're interested in, the first case is that you review their pitch deck. And when you're screening their pitch deck, we talk about doing it in two ways. First, you really review actually like what is the problem, who is the team, who are the founders, what is the market, and do I understand this business very well? And then you really want to look into what is the use of funds, what is their business model, their go-to-market strategy, and actually what are the other things that are interesting about this business that leave me interested and curious enough to feel like I want to have that next step, which is the first meeting with the founder. So when you first meet with that founder, you're really trying to form a more personal relationship to understand a little bit more about them, why they're starting their business, and any questions that you had from reviewing the pitch deck. And also you should be open to really answering questions and sharing more of yourself so they can get a feel of who you are, what value you can add as an investor, and whether they want to go on this journey with you. Because in the end of the day, they're the one taking all the risk and creating all of the value for their business. It's a privilege for them to invite you to take you on this journey with them. So once you've gone through that and say it's the happy path and things have gone really well, you then enter into a due diligence phase. And that's where you're trying to do research on this business to understand it in more depth. Who are their customers? Do they have any unique intellectual property? You know, something that's really defensible, something that they've built up which is unique to that business and proprietary. Who are their employees? What does the structure of their business look like? How do they actually go after customers? Have they got letters of intent with other businesses that say that they want to procure services from them? Like, you want to get into a more detailed look. Like, it's like looking at a car and really doing an MOT and looking under the bonnet to understand the engine and whether this car is in fit shape. That's exactly what you're doing here with this startup. And actually, what you really want to try and do is get a feel of the product. Like, can you actually test it as a customer? Or can you test it off people in your network who could be customers for this product to get different perspectives to help you make an informed decision as to whether or not you really want to go into this deal with this startup. Once you've done that, you then say, I'm interested, you let the founders know, and then you want to review the legal documents. Things like the shareholders agreement. I don't need to cover it in detail here because we've got another video all about that. But once you're comfortable with those legals, you sign on the dotted line, and then you say you want to invest in that startup, great. That's when you roll up your sleeves, and that's where the work begins. We like to say at the Angel Investing School that you write the check, write off, and go to work. And that's exactly the mentality that you need to have. So once you've invested, then you can really be useful, right? And really, why is it in your favor to actually even be useful? Because you want to reduce the risk of this startup going out of business. You want to heighten the probability that they're going to get enough customers, do well, sustain themselves, and grow, right? You're investing in this business, so you should see yourself as an extension of this business too. Now I want to go through the risk and rewards of angel investing. One of the biggest risks, to be honest, is really managing your expectation. It's quite illiquid. Once you've invested into a business, you can't then just extract your money out. It isn't an ATM, it isn't a bank. You can't just request for your money. Like, you need to go along a journey that could take 10 years or more. So you need to really be able to invest an amount of money that you can afford to lose, that you don't need to get back in a year's time, right? That is the mentality to have when investing into a startup, because you're not going to be able to extract your money for at least a long time period, even if that startup does well. The second thing to touch on is that actually there's a high failure rate, right? Up to 60 to 70% of new businesses end up going out of business in their first 3 years. It's high risk, high reward. So you really don't want to put too much of your capital into angel investing, maybe 5% of your net worth. That's the way to think about it. I want to only apportion the amount of money that I can afford to lose, and then everything's upside from there, right? So let's talk about some of the rewards. One of the rewards is the fact that you get to go on these fascinating journeys with founders who are literally trying to solve problems in the world that matter at scale. That is an incredible opportunity to build a network with fascinating people that you can learn alongside. The second thing is you often get to get a front row seat into new emerging technologies. So if I invest into this AI startup, I get to really understand what AI is from the inside of a business, which is an incredible perspective which many people don't even get from reading research papers or watching videos on YouTube. And the third thing is, if that startup does well after that long time period, whether it's 7 years, 10 years or more, you get to benefit in the financial return that you make from taking such an early bet and investing so early. So just to sum up, we've touched on what the angel investing process is. We've looked at the risk and rewards of why it's beneficial, but to understand actually some of the risks that are involved in investing into startups. And hopefully this video helps you make a more informed decision as to whether this is for you or not. Please, I encourage you to watch some of our other videos to get into a lot more depth into a lot of what we've touched on in this video too.